Good morning. It's Thursday, 26th of April 2018, like every business day, like every exchange day. Welcome to Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, but for this daily, so let's have a nice start like every day. And like every day, we will start with the same, with a disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is me. My name is Jens. I'm the German guy, the Berlin guy from Admiral Markets. We are a big international Forex and CFD broker, over 18 country offices globally. So I'm the German guy. My English is made in Germany, but hopefully some of my quality too. But I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's Day. On Tuesday, it's Paul's Day. On Wednesday, it's Giancarlo's Day. On Thursday, like today, it's Nenad's Day. And on Friday, it's Dirk's Day. Our leading day traders live every business day to the same time. Welcome to Admiral Markets. Yeah, and of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, one of our bestseller DAX 30 CFD typically spread of just 0.8 points to the main trading hours. Starting with already mini lots, 0.1 lots, choosable leverage, MT4, MT5, it's your choice. And of course, great safeguards like negative balance protection policy. Check all the details out on admiralmarkets.com. There you will find also something about our regulatory background and of course how to contact us. You can call us, you can send us email or visit the other channels like YouTube or Facebook. Everything is also linked from admiralmarkets.com. So enough on my side, and today it's Thursday, so now welcome to Nenad. What's your view to the market today? Hi, good morning, Nenad.
Hi and good morning, Jens. Always great to hear from you. And as always, we are there with best setups and trading ideas. So as you can see, I already posted my bearish outlook on Forex Street on Friday, and I said that euro dollar will drop, and euro dollar is dropping. Now, obviously, you can see that I also have one more trade today. I was really shorting, guys, this euro dollar and the pound dollar this week, and now again I'm in this trade. You can see the zone is in between 21.70 and 21.80. Okay, so this is the zone for me to short it, 21.70, 21.80, and stop loss should be placed above daily H4 at a spread, at a stop loss. That is what I see today. Of course, we might actually, if I'm in profit for this trade, I might close it before the ECB today, because there will be an important date for today, because the ECB Governor Draghi will speak. And of course, there will be also a minimum bid rate decision. Basically, the rates should stay the same. And I think that the rate decision is usually priced in the market. And definitely it will be, as always, overshadowed by the ECB press conference. It's usually 45 minutes later after the announcement. If you still don't know what I'm talking about, okay, guys, please go to Admiral Markets calendar. See, there will be basically ECB minimum bid rate decision and press conference. And the time for that will actually be 11:45 GMT, so it's my time, it's 1:45 GMT, it's Central European Standard Time. So yeah, that will be minimum bid rate decision, and exactly at 2:30 p.m. ECB press conference. Be careful, guys. Now, I might actually hold these trades, and I might maybe add a little bit because the risk is low here on this trade. And at least what I see from this is if it wants to go down, it should go down. If it wants to go up, then it will go up. There is no other way for this, because the market is very bearish here on euro dollar. The point is, you can see the market is captured below the weekly L4 that stands at 21.96. So if it still wants to be bearish, It should stay below this. We also have a confluence of EMA 89, daily H4, weekly L4. We have a channel here, downward channel, so everything is bearish. But as I say, just because of ECB conference, we might get maybe counter act movement, and that will be contrary to the trend. But yet again, guys, I'm risking my profits only. That is important for me always to stress out. I'm only risking my profits because I was really making nice money with GBP dollar and euro dollar shorts. And I mean, at least, you know, when you trade, you can afford to risk only profits if you are profitable. That is that should be your goal. So you can see we have a lot of confluence. MACD below zero line, MACD thinning, downward channel, price zigzag, EMA 89, daily H3 below, price below daily H3, price below weekly L4. Well, you know, you always trade what you see, not what you think. So let's see what we'll have. Now, regarding GBP dollar, I already closed my trade exactly at weekly L3 today, and I was very happy with this trade because this is actually what I was waiting for, the touch of 38.96, and basically the price got there, and it's still very bearish. So I would say the trend, how you should trade a pair is sell the rallies. Now, obviously, the price is a little bit congested because it's also like the price is ranging now. There is a lot of news later today, so we really need to be careful during, let's say, afternoon. But at this point, if the price retraces, I will sell it again. Probably, I'm talking about selling it straight close to daily H1, H3. It's 39.36, 39.50. My stop loss will be just above 39.80, let's say 39.70, so 39.75. If the price gets there, I think that it's natural that we see the spike from weekly level, weekly L3, because it hasn't been tested this week. But of course, if GBP wants to remain bearish, it needs to close below weekly L3 and then proceed further down. So I might take one more chance in shorting, of course, the GBP dollar. Okay, and finally, guys, one more trading idea for you today. I know that you always like to see how price behaves, or well, let's say on commodities. That is why we have gold here. So as I already showed in the analysis for Admiral Markets, you can check it on the website. It's been published. I tweeted it, and you can find it easily on Facebook. On just click the link if you follow me on Twitter, whatever, and you will see the analysis, guys. And basically, I am bearish on gold, but I will show you 4-hour time frame. You see, gold has a big bearish structure here, a lot of rejections, a big downward line. Also, you see, gold is trapped below weekly L3 and weekly L4, and obviously this is like, you see, monthly Camarilla also, and this just tells me that the price wants to go more to the downside. Why? Because monthly Camarilla, generally, guys, monthly Camarilla, daily Camarilla, weekly Camarilla, those Camarillas tend to reject the price either up or down, because now we see a big shooting star from monthly Camarillas. This is where we see new sellers, fresh sellers. So usually around these CM Camarilla levels, we see new buyers or sellers. In this case, we see selling that happened 4 hours ago. So what I think is, well, selling also gold should be probably a good strategy today, but have in mind that the gold has a good correlation with, of course, the euro dollar. So please take that into the care. You don't want to be trapped into a double exposure, because if the pairs are moving in the same direction, you actually might be double exposed to the same movement. Okay, and you can see it from here, euro dollar. Okay, let me add it. I need to add it here. Okay, gold, and save, and you can see it here. Gold, euro dollar, 97, guys, correlation. that means that the pairs are moving in the same direction. This is huge correlation, guys. Huge. I mean, it's like they're really moving the same direction. So if euro dollar spikes because of Draghi speaking, of I don't know, ECB conference, then definitely gold will spike too. So that is why I'm saying I'm really risking not much in this trade. But then again, I will still reduce my risk if I'm not in profit before the actual minimum bid rate decision. So, you know, I will just scale out, I will put the stop loss, and I don't have anything to be afraid of. Because you always calculate your stop loss according to your risk, and you need to always put the same amount of risk in your trades if you want to trade like professionals. So let's say that it doesn't matter. You can use 50 pips stop loss. You can use 10 pips stop loss. I mean, just for comparison, the risk is important. How much risk you put into your trade, into that stop loss. So you can have 1% of risk in 50 pips, in 500 pips, and in 5 pips. I mean, it's just, you know, you need to pre-calculate it. Okay, guys, those were my trading ideas for today. So if you have any questions, just ask. We can still cover more or less, let's say, a few more markets. So GBP dollar, I am watching for this, guys. Very important. Watching for 39.36 and 39.50. So if I see some rejections, I might place another short. Well, again, I want to see reversal candles, reversal patterns, whatever, guys, whatever you see fit, try to spot it around these levels. Maybe you use, I don't know, stochastics, whatever your system tells you, but pay attention to 39.36, 39.50, and if the price closes below 38.96, then the next target should be probably be 38.50, 660, and I think this is, I don't think that it could go lower, but you never know. Just you can make a nice trade again if the price goes below 38.96. Regarding euro dollar, well, I was clear. I have a trade 21.70. 21.70 to 80 is the zone. Stop loss goes roughly, let's say 22. Well, we can say 22.10 probably, with all spreads included, and with everything. Let's say it needs to be above daily H4. So if it closes above this level, then we can expect both ways today, bullish and bearish. So I will not be trading euro dollar anymore for this week. I will wait. Then I will wait for ECB. If I'm in profit, then good. This week I had almost no losses. So well, it needs to happen from time to time. But as I say, I'm fully prepared. I took my chance, so you know I'm totally relaxed. Let's see the questions. Can I hold dollar CAD buy? Ready? Basically, I still have a small position open on the dollar CAD, not on this account, but on another account. And I think you see, basically, it is a big uptrend. But you see, it really needs to go above this level because this is head and shoulders now. If it doesn't break this level, then it should drop. That is my view. So. Just again, regarding dollar CAD, I had a long position yesterday, and originally the trade was good for 40 pips, but I closed it for 20 pips because and I had that I showed you on a real not the real trading deals, but on my Wednesday live trading webinar, and the price went 40 pips in profit, but I used a profit stop and I was stopped out for 20 pips in profit, and I still have a little bit of my trade here on other account, and it's running because you know these rejection guys are definitely bullish. You see, from this spot, a lot of confluence here for bullish rejections. But here again, it needs to break this left shoulder peak in order to proceed further up. So watch for this. If it breaks, it should go up, but it needs to also close above this left shoulder peak. For me, this is still bullish, but if it rejects from this, then guys, you need to watch for this trend line below this trend line, exactly below daily L3 that coincides with the trend line. It's 28.26. It will be bearish below this level. Few more questions. CAD yen. What is my view on CAD yen? Let me see. CAD yen. Well, nothing much to say about this. This was bullish rejection, like V-shaped reversal paired with inverted head and shoulders. So, well, again, same thing. If the price goes above daily H3, it will be bullish continuation. But then again, I would say it's tricky, and I don't trade this, and I wouldn't trade this, because only below, well, I don't even know what to say about this. It is bullish, but you see, if the price does not close above daily H3, it will continue to drop towards probably daily L3 and this weekly H4 EMA confluence. So this zone. Watch for potential rejections upside from this zone. But really, for bullish continuation, it needs to close above daily H3. Dollar Swissy. Well, dollar Swissy is a counterpart to euro dollar. So if I think that euro dollar should go more to the downside, then I also think that the dollar Swissy should go up, because correlation is also huge between dollar Swissy and euro dollar, negative correlation. So you see here, it's going down now, it's retracement, but yet again it made a double top. Very clear. I mean, you don't need to be I don't know, doctor for trading for this. You see double top, above the double top, a breakout to the upside. So you know, you need to see a clear close above this double top, and the price should go to daily H4, possibly daily H5, and maybe tomorrow weekly H5. But the movement on dollar Swissy will not depend simply of the dollar. It will also depend on the ECB today, because euro dollar will give it a possible either a boost or a spike down. So what euro dollar will do, totally the opposite dollar Swissy will do. Okay, New Zealand yen and pound yen, and then we are done with it. I think I will just cover quickly New Zealand yen. Okay, and this is it. Okay, New Zealand yen, big downtrend. You really need to watch for 4-hour levels here. Yes, weekly L3, exactly as I thought. So if it doesn't, well, this is the time to go long, obviously. But if it goes below weekly L3 and makes a 4-hour close below weekly L3, then the price will drop towards weekly L4. Very clear. New Zealand yen, possible spike from this level, but watch for 4-hour close below. If it happens, then further down. And pound yen. Okay, let's see pound yen. Pound yen trapped in this. Wow, this is big, let's say, range. You see a lot of ranges inside a big range. There is a smaller range. Well, you really need to pay attention to close above this line here, where I already have it. Okay, and it is you see exactly. I would just put it a little bit, yeah, below this order, above this order block, few pips. So this is basically it. If the price closes here, okay, then if it closes above this trend line, it will go up. But if it breaks this one, okay, you see weekly H3. For me, it looks like it could go more to the upside. But if it drops, watch for a close below weekly H3. If it closes below weekly H3, then it's time to short it towards these levels here, 150.38. So watch for a close above for continuation, bullish continuation. Watch for a close below weekly H3 for bearish continuation down. So guys, this is all for me today. So again, I'm in euro dollar trade. Well, as I said, I'm risking all in my profits. 28.70, 28.80 is the zone for short entries. Stops around 22.10, and of course, do not risk more than 2%. Maximum lower your risk before ECB. If you are in a loss, if you are in profit, protect your profits. Final target is 21.20, just slightly below towards weekly of 5. But as I say, we don't know what it will be because of the ECB conference. Well, even then, as I say, watch for levels higher. If Draghi is dovish, we should see a rejection to the downside again. If Draghi is hawkish, then we should see a reversal on euro dollar, and next week we will probably see uptrend. It will depend on today's ECB press conference, guys. That is very important. Thank you for listening, and as I say, enjoy the weekend and talk to you soon, guys. Bye for now.
Tomorrow is another day. So also tomorrow, real-time daily trading ideas, 5 days a week, 5 different traders. So hope to see you tomorrow again. And if you'd like to see this webinar again, a couple of hours later on our YouTube channel. So all channels for you. Greetings from Berlin office from Admiral Markets. Bye-bye.